As you can see, the overall crypto market continues to pull back and the selling is going on. So there is one outlier. It's still PEPE that's standing out. We'll take a look at that chart today and a whole lot more. There's a bunch of altcoins that are also entering into perfect zones where there is trade opportunities. So we're going to outline that and a whole lot more on today's show. I wanted to start off again with Bitcoin. It's going to be more of a very quick overview on Bitcoin since we did cover it very extensively yesterday. So without further ado, let's get straight into it. On the weekly chart, essentially what this chart's calling for over here is around 25k. If you're looking at it on the high time frame, anywhere within this blue box territory, so 24.5 ranging all the way up to about $26,000 is fair game for a wick to come into that area. And then you're looking for demand to kick in and for price to quickly bounce out of that zone on Bitcoin. And then if you look over here, we're using the Renko chart. The Renko chart was showing that price is coming into resistance, as we can see over here, marked by the gray box area, underside resistance between 29,000 and 31,500. And consequently, this candle with Renko, it usually averages out the price action to create a more clean and concise look on the chart. And you can see yesterday there was a green candle that was still over here. Based on the continued selling pressure over here, you can see that that candle has now turned fully red, signaling that there's most likely going to be bearish continuation. That is, if you are trading the Renko chart. Remember, the Renko chart would be calling for at least 2 candles, but these candles play out longer than what it shows over here, that being a daily chart. It plays out over a couple of days to smooth that out. Ethereum on the Gaussian channel, this is one that I'm keeping a very, very close eye on. And the reason why is it's at very key levels. So not only do you have it meeting up with the middle of the Gaussian channel, that red band over here, you also have it matching up with the 9 exponential moving average. And then for me, more importantly, you have the blue lucid SAR, the little asterisk sign that is over there. So as long as this area holds, I would be looking for potential bounce from the zone. If that level gets taken out, I'll start to have much lower price targets on the table. And I'll start to say that there is a high probability that maybe this relief rally has indeed come to an end. Remember, for a long time, since all the way back in December, November last year, we were outlining the potential for Bitcoin to rally anywhere between $28,000 and $33,000, and we said we'll treat that primarily as a relief rally, and at a later stage we'll reevaluate whether this is a transition into a bull market or in fact it will be a relief rally. And now we're at that phase, right? So we've hit those targets, we've got to the 30k level. Could we push a little bit higher? Indeed, we definitely could get to that 33k still, and then it's time to start to reevaluate. Are we turning back over? Is this just the end of a relief rally? So here's Bitcoin. If you have a look at Bitcoin's one in relation to Ethereum, the lucid SAR is coming in much, much lower. Remember, the SAR stands for stop and reversal point. So that one's coming all the way down at $22,000. And then you have the moving averages, or the EMAs, matching with the middle of the Gaussian channel. That's matching up around that 25k level. So Bitcoin could still potentially hold its bullish momentum even if it comes a lot lower. But the question is, will altcoins be able to withstand that? That is the big question. Also, yesterday we did have the PMI results which came out. So that is the ISM manufacturing PMI for the US, and it came in at 47.1. Now, what that essentially means, anything that's under 50 suggests that the US economy is contracting. A contracting economy is usually not that conducive for a risk on assets, although the assets could still be undergoing that transitionary phase, but it doesn't mean that you can't experience relief rallies. So what does that mean? Under 50, contracting, treat everything as a relief rally until proven otherwise. And once the economy starts to expand again, back above 50, then you enter into a healthy market. Okay, Bitcoin with the divergence chart over here, RSI divergence, OBV divergence, Bitcoin in a rising channel. Yesterday we outlined if you start to close the daily underneath that middle, the middle line of the channel over here, which we did, then you can expect that most likely prices are going to continue lower. I've tried to readjust this and fit it according to the line of best fit, and the line of best fit is the upper parallel channel over here. So you can see a touch wicks from wick to wick to wick, all the way to that all-time high wick, well, the recent highs at least that we had, which came in at 31,118. And now we've started to lose that mid-level. So what does that mean? If you do revisit the bottom of that channel, you're looking again around that $24,500, $25,000 level. So we'll wait for this to continue to play out. You won't have confirmation until you take out those lows, the recent lows that we had over here around 27K. I'm going to give you the low time frame trigger plans and everything that I'm looking at going into tomorrow's FOMC. Remember, tomorrow from an economic standpoint is going to be a really, really big day. So that's Wednesday. You have a whole lot that's going on. Unemployment change, unemployment rate. Then you have, of course, the ISM services PMI. And then you have the FOMC statement followed by the press conference, which is where Powell will be speaking. And that's ultimately what will drive the markets, because that gives us a little bit of forward guidance based on his tonality, and the questions that he answers will get a better understanding of what to expect for the next interest rate hike, or if there is even going to be any other interest rate hikes. Okay, paired up with the bearish divergence on Bitcoin, we also identified this already quite a while ago. I think when we had this candle on the 16th of April, we identified there's a doji candle which is currently taking place, marked with very, very low volume. Look at the decline in volume. So volume started to pick up over here as selling was coming into the market, and we reached those lows. And then we had nice volume to push price up to these levels. But then as price was rising higher up, the volume started to drop off of a cliff. Now, when you see low volume while price is making recent highs, what are recent highs? Recent highs, you want to look back in the previous price history. You can see the empty space over here. This suggests that this was the highest candle print that happened up to 317 days back, which is almost 1 year, almost an entire year backwards, like 10 months or something of that sort. So the last time we were that high was in May of 2022. So what is that indicative of? That's indicative of the bearish divergence over here most likely playing out and being correct. It's indicative that big players are loading off their positions whilst price is coming into the highs, and that's why the volume is so low. There's no demand that's kicking in to push price higher, and you want to typically see price making new highs backed by heavy volume. That has not been the case. So what have we got over here? We now have this level marked off. This we already had from back in early March, or late March, excuse me, where we marked off the horizontal line at $27,244. So if price starts to come below there, what you want to look out for is two things. One, potential swing failure pattern. There is a possibility that you would see a swing failure pattern, something to just wipe out the stop losses over there and then immediately reclaims that level. That means that you could probably start to target a little bit higher once again, especially if volume kicks in. The other thing you want to look for is if price does come below here and you have a confirmed swing failure where it holds below, then obviously that's going to open up a real short position and prices could then go a lot lower. So what are the levels we're looking at? Well, then you'd be looking at about 25K, and then after that around that 21K level if that zone does get lost, the 25K level zone. And what would that look like? It would look like this. We covered it yesterday. Remember, you had the broader range. This is the main range. You deviated below the range when we set those lows at 15,500. Price then came back into the range and started to pump back up. This could just be another deviation which would lead price back into that range. That's if you lose the 25K level. You can see how that would very quickly become bearish, because then your next target is around that $21,000 zone. All right, Bitcoin dominance still trying to make a decision over here. You can see it is deviating back into the broader range. What is the broader range for the Bitcoin dominance? Well, here it is. This is the long-term range that's held. So price anytime into the top of the range, or at least the dominance into the top of the range, rejects, comes down, bounces off the bottom, bounces off the top, and it just keeps oscillating within that region. That's what we've been looking at over there. And now it's coming back into the range. We need a little bit more time time to unfold. The only way we can really confirm which way this is going is when you take out the lows. The lows are marked by the dashed line over here, which is going to be 46.9%. Confirmed closes below 46.9% on the Bitcoin dominance would be indicative that obviously altcoins are going to suffer against their Bitcoin pairs. And then to the upside, if Bitcoin dominance starts to take out the previous high over here on a closing basis, 48.86, I'll then be looking around this zone at 49.8. But anything above that, and it could potentially go a lot higher, you're talking about even as high as about 60% for the Bitcoin dominance, which is not something that many people expected to see since the altcoin market has had this massive interest, and you've got thousands of new altcoins that have come into play. For Bitcoin dominance to take such a massive shareholding, you can imagine would be pretty catastrophic, right? For what are we on, like around 30,000 different altcoins that are out there. Okay, next, what else could drive markets? Well, you do have big tech earnings that are coming up. We have Apple, and then we also have Coinbase. So if you look at the Coinbase chart, it's been nothing but pain for investors since the IPO, which took place all the way back in 2021. I have told you guys before, generally speaking, when you see an IPO, it doesn't happen 100% of the time, but it happens enough to make it a worthwhile trade. On the day of launch, usually you see that IPO retrace at least 50%. So you should wait for at least 50% on usually new coin launches, altcoins that are IDOs, ICOs, whatever it is that you want to call it. When a new coin launches, wait 50% or more. And the same thing on IPOs. So if you have a look at that, that was 50%. Where is Coinbase now? Coinbase is currently down 88%, which is quite catastrophic. If you look all the way down to the lows, that was 92.78%, and the chart speaks for itself. It's an incredibly strong downtrend. We did start to find some sort of a range over here between 34.60 and 103, so a very, very big range. But overall, you can see that range is being marked as a downtrend. So you got lower highs and lower lows, and this is high time frame. This is on the weekly, so don't be surprised if earnings do come out bad and you see this trend down, creating yet another lower low. That would bring Coinbase down in the region of about 95 to 98%, depending on where that support gets found. On the bullish side, though, of course, let's see what happens over here. Maybe it doesn't break below that range and it starts to bounce off this zone around 34.60. That could present an opportunity to get long with your stop below the previous swing lows at 32.26, and then you can play that up towards mid-range, and then after that towards range high. So that's Coinbase stock for you over there. Total, let's have a look at total areas of interest. So if this is in fact deviating back into the range, remember you can see clearly the range. A lot of the markets, both traditional and crypto, have pretty much just been range bound for a long period of time. There's the range that you can see. If this is deviating back into the range, my area of interest is coming in right around here. You got the diagonal, which matches up with the mid-range support that is on total market cap on a 3-day chart, meaning that prices could come back below 1 trillion level mark. So it's going to come down to 984 billion, which is right over there. What about total 2? Well, if you have a look at total 2, same thing. You do have a trend line which is coming into play. I'll put a price label on over here for you. So I'd be looking somewhere around this area if prices continue to come down. 545 billion for total 2. What about total 3? Total 3, the area of interest, first area of interest is coming in at the mid-range. Here's your mid-range, 347 billion. And then after that, potentially lower, it could potentially come down to about that 301 billion. And then we can reevaluate from that point. But you can see very clearly this is a downtrend still, right? So you got lower highs and lower highs. You had a little bit of a fake out over here where it got people excited, looking like it's breaking that downtrend. I told you guys, wait for a couple of confirmations on the 3-day chart, a couple of candle closes above this level to confirm that this is holding. You want to see it push up, potentially even higher, and then you look to bid that next higher low, which breaks out of the range. I always wait for something like that if I am taking a swing trade, so a big push up, and then on the next higher low, when it swings back down, you can enter your swing trade. You've then convincingly broken out of that range. That did not happen. As you can see, big fake out, push up, straight back down, and now we're looking at the potential next targets. If it does bounce from here, because yes, it is still high lows, right? High low, high low. If it does bounce from here, that's fine. You still stick with the same plan. That plan being get properly above this 402 billion level. So around here, get above that level, hold convincingly, and then altcoins could potentially catch a bid. And then remember, the real party begins when you get over here at about 500 billion market cap on total 3. Okay, S&P 500, you can see still right around that range high. I wouldn't consider this a confirmed breakout yet. This gray area is a cluster of resistance for the S&P 500 futures chart over here. So we will be wanting to see what happens over the coming days. We'll probably have our resolution based off of what happens with Jerome Powell and the FOMC. It's either going to lead to a massive breakout or it's going to lead all the way back down to the 0.75 level, which is coming in at 50 for the S&P 500. So remember, when you're at these extreme levels and you consolidate into those zones, that usually leads to big moves. It's indicative that volatility is going to come into the market in a big way. You're either going to have an expansive move to the upside or a big breakdown. All right, just a quick update over here on natural gas on PrimeXBT. We still are in that trade. This is a swing trade, which we're holding for long periods of time. We entered all the way back down here at $2.07. Price is currently at $2.35. If you do ever want to follow along with those trades, we usually drop them in the Discord. The link to the Discord is in the description below of the YouTube channel. And then also just to mention, PrimeXBT have a sign-up bonus. Use my link, it's in the description as well. You get $7,000 in sign-up bonus if you do want to trade stocks, forex, commodities, or crypto over there. All right, before we move on, guys, let me know in the comments who is present. I haven't even done a quick check-in. I see Banter Girl, you are here. She says, let's get Kyle to 500 likes. That would be much appreciated. I see there's over 1,000 of you that are live right now. Please make sure to smash the like button. It helps to get the content out there, and I've had a short break, so a lot of people don't know that I'm back yet. We got 𝗕𝗏𝗧, we got Angard, we got Marks, Vincent Mark, we got Andy, Byers, Bob, 𝗔𝗍𝗵𝗵, Noah, I see Mike. You guys are all in the house. Thank you so much for joining once again. I appreciate all of you. All right, the dollar index, we mentioned yesterday, we're looking for the DXY to potentially push up and hold above this level. I said for me personally, I wouldn't be getting too bearish on the DXY unless we break back below these zones of here. That's the liquidity coming in at 100.8. So as long as you're holding these levels, then I would be treating this as yet just another higher low. You can see how quickly on a high time frame, if you really zoom out, this could easily form into a W formation, right? The W patterns are mega bullish. Let me just draw that again. This could easily turn into a W formation pattern. So a big push up comes down, creates another higher low. Then first target would be the key yearly level at 103.5. If it clears that, we're going to 104.8. And then the real breakouts happen when you clear this zone over here. That means 108.6. Now, don't let that frighten you or make you panic if you are in crypto positions, because it doesn't always mean that a rising DXY is a falling crypto market. There is somewhat of a correlation, but it's not always the case. You can go back in 2017, the DXY was rallying and crypto, as we know, went into one of the biggest bull markets that we've ever had. So it's just something to take note of if you are trading something against the DXY pairing. All right, Bitcoin over here on the 4-hour chart, so lower time frame. You can see we covered this yesterday. We were looking also at the EMAs. We got the 50 and the 200 EMA. We have started to lose that 200 EMA, which if we hold below here for long periods of time, that would be quite bearish. Your best case would be you're looking for some sort of a deviation like that back above those EMAs. But currently, we're holding below there. I'm looking more for swing failure pattern. I'll show you that on the next chart, on the lower time frame chart. All I want to outline to you over here is there's a build-up of short positions, right? Because there's a lot of shorts that have come into the market over here. Lower highs, lower highs, lower highs. If you see a swing failure pattern and it comes back up, these guys will get wiped out quickly, and then you'll probably take out those stops as well. And that's something that I'm looking at as a potential going into the FOMC meeting. So it would look like this. This is the 1 hour chart. Here's your clearly defined range. All you need to do on the hourly chart, you'll see the big price move up, which comes to 30,050. Mark that level off. So 30,050 is coming in over here. And then the wick low, which comes in at 27,230. So I'm looking for pretty much both sides of this liquidity to get tagged. If price comes down over here like this, if you see price come down, which so far it looks more likely we're closer to this end than the other side, a big quick sweep of this low. I don't know how low it goes. Maybe it goes to about 26.5. Reclaim that level and hold. That's your trigger long. And then your stop goes underneath there. I'll be longing to mid-range and then final take profit at the top of this range. That is a possibility. It looks less likely, but it is all possible that it goes the other way into FOMC, that this starts to just pick back up and then you wipe out the stops from this level over here. A lot of stops above $30,000 and then again swing failure, so it fails to swing to the upside, breaks back into the range, stop goes over there, and then same story. I'll just be shorting down then to the mid-range and then final take profit at the bottom of that range. Let me know in the comments, does that make sense? Does that help? That's kind of what I'm viewing. It's exactly the same thing if you look at Ethereum as well as a lot of the altcoins. So there's Ethereum, 1,965 is going to be the range high, which we're playing with over the next 24 to 48 hours. And then the range low is going to be 1,791. So again, looking for more something like this, hold, stop below there, long to mid-range on Ethereum, which is around that 1880 level, and then long into the top or the range high. I'm not in any other trades other than that. That's kind of what I'm waiting for. Otherwise, I haven't taken any other trades. Also outlined to you guys yesterday. Watch this over here. You can see the cumulative volume delta for the stable coins, which is the leverage traders, is continuing to trend down, meaning that the guys are shorting the market, but yet spot is still holding up. That's denoted by the orange line over here. It is weaning over here, but nevertheless, it is still holding up. So if spot starts to kick back into the market, these guys will be forced to very quickly close their positions, and then you get those quick impulsive moves to the upside. That marked with the funding rates. If you look at the funding rates, I know it's very dull over here, but go to coinalize.net. It's free to use. Go type in the funding rates under the indicators over here. You just type in funding like that, aggregate funding rates, click on that, and you can look at it for yourself. You want to see red prints. So if it happens simultaneously, right? So let's go back to Bitcoin. So what are we looking for? Basically, you're looking for this, right? Price comes down, sweeps the lows, reclaims. Whilst that sweep happens, we then want to look at the funding rates. Are the funding rates extremely negative in that phase? If that happens at that phase, so you see something like this, very, very red periods whilst that happens, and then it reclaims on your first tick of green signal, there you go, it's time to go long. Most likely these guys are going to get taken out of their positions. All right. I also wanted to look at altcoins just to show you like the broader altcoin market and where a lot of these coins are lying at the moment. Before I go on to that, I do want to also mention, click on the link. Shout out to our sponsors. There is links for all of them below over here. Make sure that you get an account over here with ByBit. Sign up to ByBit. You get up to $30,000 in sign-up bonuses. And then also make sure that you click the link to the trading competition, which is this one over here. We are using the Discord. So let me click on the Discord over here. If you have a look at the Discord, there is the 10x trading challenge, which I mentioned yesterday. By signing up to ByBit, by entering the competition, you automatically get into the Discord. That is your key into the Discord because this is a private Discord, right? I've given a couple of rules over here, which I just want to go over for a very quick second. I said, be extremely patient with your entries when we give you a trade. Stagger those orders over 3 to 5 different buy zones, with zone 1 being the entry that we give and zone 5 being right where your stop loss is at. So this is just a very quick lesson. Let's take, for example, this trade. Let's say that we're giving you a long over here. This is what it would look like. Here's your entry, right? Swing failure patterns confirmed. Here's your entry, TP1, TP2 at the top over there. Stop loss goes somewhere around that region, just as an example. So what do I mean? Stagger your orders over 5 different entries. Well, entry 1 would be over here. Entry 1. Okay, there you go. entry 2. As its price starts to go against you, you enter into the market. Entry 3, entry 4, and then obviously entry 5 would be as close to invalidation as possible. If price goes below there, you're completely out. That gives you an average entry, so you're scaling into that position. That's what we mean. Then your average entry is actually over here. You don't need to go all the way in. If price does this, and those are your entries, and it only goes down like that, and it grabs 2 of them, then great. You have, what is that? That's going to be about 30-ish% of your positions are entered into the market, 25% to be precise, and that is good enough. Okay, what is the other rules that I gave? Let me give this here. Okay, I said we'll update you on the take profit and the stop losses accordingly, as sometimes the conditions change and we may see reason to exit earlier. Therefore, be vigilant of this. Therefore, stay on Discord, or at least have some sort of notification on. Browse it at least. If you are in a live trade, make sure that you're checking it at least every hour, just to see in case we change something, or something in the market changes and we decide to quickly take some off the table, or we decide to exit the position fully because maybe something is happening in the stock market or Bitcoin, and you're trading an altcoin. Next, and this is the most important part, we will mention whether it's a swing trade or a scalp. Okay, typically we're risking 2 to 3% of the account size on any given swing trade and 1% on a quick scalp. So calculating your position size and how much you will contribute towards each trade is vitally important. If we give a trade, I know you guys have the utmost confidence in me. I am definitely not 100% correct 100% of the time. Not even close to that. And nobody in the world is. No system in the world is. Nobody can trade like that. Otherwise, we would pretty much extract all the wealth from the entire world in a matter of days. So what does that mean? That means when we give a trade, no matter how confident you are, do not go 100% into the trade with your entire account. This is a trade. You have to calculate your risk to reward. You have to look at the risk to reward that we've given. Like, for example, here's the risk to reward, right? There's one. Here's another one. DYDX. This is the risk to reward. Therefore, if you get stopped out, you can't be losing 100% of your account. I can't even tell you the amount of times I've received messages from people where they say, it's your fault, you wrecked me, I lost my whole account. I'm like, what do you mean? They say, oh, I took the trade that you gave and it got stopped out. Okay, cool, it got stopped out. Now you lost your entire account. So your stop was losing your whole account. That's insane, guys. Be very, very careful. I know it's speaking to a very select few. Most of you know exactly what you're doing, but I still, just for the disclaimer purpose, have to put that all out there. Okay. 10x trading challenge, it is in there. Make sure you signed up, and we did lose the first trade. Just full disclosure, we lost the first trade, 2% down on the account. To give you some extra info, over the course of 1 month, because the aim is to 10x account in 30 days, most likely there's going to be between 40 and 60 different trades in order to get us to that point. Next, let's go on to the altcoins. So definitely the frog in the room is going to be PEPE. So here it is. It's absolutely pumping still. Yesterday, I noticed that I was on the coin. For some reason, it was on BitGet, and it looks like it never refreshed. So I actually wasn't aware that PEPE had pumped as much as what it had. So I'm actually only looking at this for the very, very first time. What I would say for this, these coins are gambles, but you can see the trend can continue quite easily. When you have Bitcoin, which is obviously selling off as well as the rest of the market, and you have something like this, or a chart that looks like this, that's been going straight up, the probability is high that you will see a continuation of this trend, especially if Bitcoin does reverse. That's all that I have to comment on this. It's a very young chart. It's very difficult to chart. Just understand, if you're taking a trade on here, you'd be looking to establish an entry pretty much over the course of a day. Let's say you decided today. Easiest way, I would literally just if I had a position size of 1,000 that I wanted to risk, meaning I'm willing to let $1,000 literally go to zero, I would just take that and I'll just buy bit by bit by bit throughout today until I've entered the full $1,000. That way, if price comes down, you're kind of scaling on the way down, your dollar cost averaging into the position, and then consider that a gamble. Just hold on for dear life and see what happens next. Put your stop below the previous day open. Every single day, you can continue to raise that stop. So it would be like this. If you're in over there, stop goes below there. Next, below the open of that day, below the open of this day. Let's say that once today closes, it closes here, stop goes below that, and you just keep trailing that stop loss up. All right, other altcoins. Let's quickly go through some of these. Okay, so this one, okay, this was the inverted, or this, not the inverted, the normal head and shoulders. This is, I think it's Stacks STX. We gave this a long time ago when this breakdown was happening over here. Left shoulder, head, right shoulder. Yes, I know the right shoulder is very, very small, but nevertheless, the pattern's still playing out. You're looking at your first TP, which is coming up at 57, and then your next TP is going to be all the way down at 32, which is quite an aggressive move. Okay, Solana. Here's Solana. Solana, you can see strong downtrend, right? Very, very strong downtrend, which took place over here. And then we've got the strong horizontal levels that have been marked out. Price held this diagonal, broke through the resistance, and we're looking for that to flip into support. We're right on that level now. Technically speaking, you could be long on Solana now with your stop. I would probably put it below that wick. If you lose that wick, I would say you're probably coming to the next targets, which are going to be around this $18 and $16 level. Okay, let's look at AVAX. All right, AVAX still range bound. We identified on a previous show that this is going to be a huge amount of resistance over here. And as you can see, AVAX failed to get through that. So you're just treating it all as a range. Most of these have rejected from the top of their ranges and now are moving towards the bottom of the range. Let's show you Chainlink. You'll see what I mean. So Chainlink targeting back down towards the bottom of the range at 545. Rune. Okay, Rune's at an interesting level. Look, definitely not major strength in this market. Rune has done absolutely nothing. Strong downtrend, holding below what was the previous range low, coming back into this diagonal trend line. If this level gets lost, I think that would be catastrophic for something like Rune. So a lot of the altcoins look really bad. If you start to lose that, you can imagine this could go a whole lot lower. You could go into full-on capitulation on Rune. GNS. Okay, here's GNS. GNS had at the time it was holding this diagonal over here, and it was looking like it could potentially have a breakout from this zone. Straight rejection from the upper trend line, back down below the range, coming now towards the range low at 425. GMX. Here's GMX. Same thing, coming back down towards the $60 zone. What else? Optimism. Optimism looks quite bad because Optimism has its primary range. So here's the range, right? And you're looking at a big deviation, and this would just be a complacency bounce, right? Complacency bounce over here, coming back into the range. As it breaks into that range, you can imagine it's probably going to start to accelerate very quickly towards the downside. Arweave. All right, Arweave also all the way back below its range lows. The pink box, it never held that. You can see over here, you wanted to see for strength for that to hold. Now it's coming back into the diagonal. The longer it spends time over here, the more likely it is to break. The more times you hit onto resistance levels or support levels, the more likely it is to crack through that zone. Same thing as what I showed you on Rune. If this level gets lost, it could lead to a big capitulation towards the downside. Let's look at Dogecoin. Okay, Dogecoin, same thing, lost the mid-range over here, big push up and pump over here. Elon Musk didn't do anything on May the 4th like a lot of people anticipated, and consequently, it's selling off, probably coming down to about that 67 cents level, 0.067 to be precise, which is going to be the range lows. Atom was one that's still okay, but I can't imagine it's going to hold up against the rest of the market. We gave this in the daily candle newsletter, holding the diagonal trend line over here, coming towards the horizontal resistance, entered into a long trade. Stop was below this wick over here. Technically, you could still be holding that trade, but if the rest of the market goes down, I would expect this would do the same. Okay, Vulcan Forged. You can see Vulcan Forge approaching a diagonal trend line right at the bottom of the range. That means it's coming all the way down potentially to $2.90. What else? Near was another one I think worth looking at. Near's also all the way back down at range lows once again. So watch for the reactions, guys. These ranges can hold for longer than a lot of people realize. This could just be an accumulation phase. What I mean by that, so you could probably zoom this out. Just quickly grab this. 1 second, let me grab this and move this across. what a lot of these coins may do is they may just continue to accumulate for a long period of time. So the way that you see this now, you may see price do something like this and kind of just oscillate around this region for a lot longer, possibly even into next year, and then eventually the market runs. What does that mean? That means that any time that you come below this range low, as long as it's not breaking below the previous lows, which is over there on the left, that could be an opportunity to long, but only if you're wanting to accumulate. This is only for an investor. If you are a trader, there's no point in touching this. You're better off going for coins that are showing major signs of strength, which this is not one of those. All right, guys, I think that brings us to the end. I mean, I've covered a lot over here. I see in the comments you guys seem to be happy with all of that. I've covered pretty much everything. Let me just have a look over here. Anything else worth mentioning? Nope, that's it. All right, make sure that you go through to the YouTube link below, smash the like button, hit the bell notification, and subscribe to the channel. Regarding tomorrow, I am going to attempt to do a pre-recorded show. I'm definitely not going to do a live show because I'm going to be on an airplane. I have to go to another city, believe it or not, to have a meeting at the US Embassy to try get my visa renewed. It expired, and that is for Bitcoin Miami. If you can just put the YouTube back, James. If you go through to the YouTube link below, that I also need to mention over here. Where is this? Bitcoin Miami. Here you go. Please make sure that you click the link below over there if you would like to get a ticket for Bitcoin Miami. I think it is in the region of about $900. We have 4 tickets that are left out of 20. You'll be able to join us. That's myself, Sheldon, Ran, Hustle, Miles, and a couple of other guys from the Banter fam, and other ticket holders for a fully paid for dinner. So make sure that you click the link over there. That's for Bitcoin Miami, and you get to eat dinner with us. I will see you guys all on the next show, whether that's a pre-record tomorrow or on Thursday. That's it from me. Cheers for now.